So stocks moving higher off of earnings. I want to ask you about that guidance. Revenue guidance was soft, but the EPS guidance was better than estimates for both the current quarter and for the full year. What is that saying about the current environment for cybersecurity?
Well, overall, I would say the demand environment is very healthy for cyber. I think it's fair to say we have a heightened threat environment. Malicious activity is on the rise. We've all seen the headlines about Salt Typhoon and the attacks on U.S. telcos, and even more recently, attacks on the Treasury Department. And the fact is, we've become a very digital society. There's no turning back. There's been a proliferation of connected systems, assets, devices, and even data. So all of that has expanded the attack surface for customers, and it's made organizations difficult in managing and assessing their cyber risk. Overall, the results for the quarter, we were pleased with. We delivered upside in revenue, earnings, and cash flow. We're doing a good job balancing growth with profitability. Demand was strong. We added over 400 new enterprise platform customers. We had one of our best quarters for large deals, net new six-figure customers, and we're seeing outsized demand in cloud and certainly our exposure management solution.
All right. So, Steve, speaking of deals, you actually made an acquisition in the exposure management space. What do you see that doing for your business in the near term and the long term? Jeffrey's out with a note praising the acquisition, but saying it's going to take a number of quarters for it to really benefit the company. Explain to us exactly what is exposure management and what's your near-term outlook and your long-term outlook.
Sure. Well, we're really excited about what Vulcan will add to Tenable. First, it's important to note that cyber is a market that historically has been best of breed, meaning customers were quick to deploy solutions and technologies that protect a very specific area of the attack surface. Now, the problem that creates is that most companies have 80, 100, even 200 plus different security vendors in their supply chain. So companies over time have developed a very siloed view about exposure and their risk within their enterprise, and they're sitting on mountains of data. Vulcan helps solve this problem because it ingests data from hundreds of different security providers, and when combined with our own exposure data, it will give customers a single unified view of risk. And in short, it will help customers develop quicker insights and help customers identify a likely path of the exploit so they can address their most urgent vulnerabilities sooner.
So will this be accretive to earnings in the near term or to revenue? I mean, how do you see it? When I looked at your guidance, you didn't factor in any impact from this acquisition.
Well, we expect to close the acquisition certainly over the ensuing days here. The guidance that we gave last night was Tenable on a standalone basis. Overall, we're pleased with the results for the quarter, and we think we gave a good guide on the top line that was largely in line with the results. The cash flow was certainly better. There is some cautionary comments we made about federal spending. Fed is a massive opportunity for us. It represents about 15% of our total sales. But in the short term, there's a little less visibility there because of the new administration, the overhang of continuing resolution, and we probably will see another CR extend into April, and that means that we may not get another federal discretionary spending budget until maybe sometime in May. So outlook, we're very excited about our outlook and certainly the results of the quarter, but certainly some cautionary comment with regard to funding.
Steve, let me ask you, you're mentioning the current administration, so you get about 15% of your revenues from the government. When it comes to this new administration, whether it's the Department of Government Efficiency or the trade war, how does that impact your business? Do you expect to see your business with the government reduce because of DOGE? And also the trade war, does that potentially lead to a spike of cyber attacks and cyber threats?
I think there will always be a demand for cyber solutions, and the administration is certainly committed to strengthening our cyber defenses. I think short term, there's just a little less visibility. There's a number of appointees that need to be made from a cyber perspective in terms of CISA and other agencies. And so while that's happening, I think spending priorities will certainly be in flux. We're very bullish about public sector and U.S. federal. I think with regard to tariffs, we're monitoring the situation very closely. Should there be a rippling effect into software and cyber in particular? But the tariffs that have been announced to date are largely on physical goods, natural gas, and other sources of energy. But overall, we see good durable growth in cyber and demand for exposure solutions.